Welcome back, investors, to Ticker Time News. I'm Adam, and the Snap apocalypse is upon us. Yeah, Snap reported their Q2 earnings in the after hours, and they are down 26.48%. That's a big drop, and it's not the only time Snap has dropped big like this. They have had other big drops due to earning misses, notably back when the Apple iOS changes came out. And boy, oh boy, that hurt Snap, and it still does. So, Snap, ticker symbol SNAP. Ah, boy, they are hurting bad. Plus, they gave no guidance, none at all, for moving forward. So, they're not even sure what's going to happen to them going forward as far as what type of revenue can they bring in. Okay, here's the quick numbers. They reported an adjusted loss of 2 cents per share on revenue of $1.11 billion. So, I mean, that's still a good amount, but they're a pretty big company. Now, analysts expected a 1 cent per share loss on revenue of $1.14 billion. In other news with Snap, they also announced they are going to slower their hiring as well as their rate of operating expense growth. So they're basically shutting things down and trying to keep it steady with where they are currently at. No more hiring, no more expansion. Let's just hope and pray that we can make it through. See, this is the sign right here. Snap. I know it's not the first time it's happened to them, but this is the sign. In the after hours here, other companies are dropping, right? Meta platforms, they are down in the after hours because of this news. And the reason Meta platforms and other internet revenue seekers for ads are down in the after hours, I mean, there's a whole list of them. Pinterest is one. Alphabet is one. They're down because for Snap's platform, the reason they lost so bad is because there was no demand for ads on its platform. And if you're not getting ads, you're not getting revenue from the number one source of your revenue for your company is not going to be doing very well. So Meta platforms, Alphabet, Pinterest, even Etsy, there's a lot of companies that you can toss in this bucket that are going to hurt. And it's all because of a recession, right? Because growth is slowing. The economy is slowing. We've been talking about this for months now. We know this. And it is going to slowly take effect, right? We have seen these growth concerns pop up throughout the day as these months have gone by. Every day there's some new story about growth concerns. They're not going away. They're going to happen slowly and then all of a sudden. It's how these things work. So there's a snowball effect going on with Snap right now, and it's not very good. Now, I want to point out in the title of this video, I wasn't sure what to put today, but I am sensing either the market is on the verge of breaking or are breaking key resistance levels, or they are getting right up to those levels and they're either going to smack the resistance and fall, or the market could potentially be on a significant bull run, still within a bear market context, like we had with the snapback rally at the middle to end of March. Or the other option is this is FOMO, fear of missing out. Which one is it? Right? Are we on the verge? I'm going to show you a couple of things that are happening here, and you decide. Is this real momentum or FOMO? And I guess FOMO is real momentum too. But you understand what I'm saying. So let's start out in the energy sector, because with all things, that's where it begins. I'm going to go to XLE, okay? And we're going to look at this real quick. On the weekly chart, that's what I'm going to go to here real quick. It's going to take a second to load. TradingView always lags for about a second or two before it loads up properly. Got to click one more button. Okay. This is the weekly view for the energy sector. What we have here, this blue line that's going up and to the right on the screen. Back here in October of 2020, the energy sector tagged that and started using it as its support line. It tagged it again. I don't have a circle here for it, but the 16th of August of 2021, that week. It tagged it a second time, September of 21. It tagged it again for a fourth time, December of 21. And it almost tagged it last week, but it did not. Instead, what is going along parallel to this support line is there's another blue line here. It's tough to see, but the blue line comes like this, and then it hangs makes a turn there, and it's running up here. What is this line? This is the 50-day moving average. It bounced off that 50-day moving average with a reversal candle, okay? A candle that has a lot of wick on the bottom half of the candle and no wick to just a tiny wick at the top of the candle. That's a reversal candle. And then this week, right now, we are in its weekly expected range. We have one more trading day left to go, Friday. And if I scroll in here, you can see the green candle for this week, the two purple lines, that's the weekly expected move. It is perfectly on the inside of that. As a matter of fact, the weekly expected move on the upper side of energy is $71.87. And we closed today at $71.74. So just pennies away from the weekly expected move. Now, here's the thing with energy. It bounced off that 50-day moving average. And what do we say with the 50-day moving average? Bullish above, bearish below. So it is in a bullish context, even though it has pulled back for several weeks in a row. This could be the first, significantly green week in what, 1, 2, 3, 4, 5, 6 weeks? That's pretty darn good. So it is above that 50-day moving average, which is bullish. It's also above that blue trend line. That's also bullish. And since it bounced off of that, that's also bullish, right? Now, energy has been massive in 2022. Energy is a big mover also for inflation. If energy comes down below this trend line, below that 50-day moving average, so will inflation. Okay? And inflation is key right now because that's the mandate that the Fed has. The Fed's mandate is to bring inflation down. You bring energy down, you bring inflation down. But the opposite is true if energy goes up. We have a green candle this week for energy. And if energy now is going to march back higher again, that's not good. That means inflation is going to march back higher again, even though we haven't seen it yet because it takes a while for the prices to work its way through to end up at the CPI or the PPI, right? CPI is a lagging indicator. It's looking at the past. This is looking at today, practically. So it's key to watch. When energy falls, typically stocks go up. Why? Because people believe that inflation will be coming down, meaning the Fed will be more dovish. If energy goes up, stocks come down. That's how it's been for 2020. And one more thing about energy. If it does come down, the Fed could become more dovish. And maybe if energy did come down and break this trend line and fall below it, maybe we could see a Fed pivot. That's a big if. Because right now, energy's green for this week. And it's right in its weekly expected move. So energy is still in a bullish context, but I want to point that out, okay? Another thing, energy is respecting its lines perfectly, bouncing off 50-day moving average, staying within its weekly expected move. Those lines on these charts, they're not just on here for the looks. They mean something. So remember that when you're charting too. Now, real quick, I see a bunch of your questions, all FOMO. Yeah, Snap, imagine they gave, oh my gosh, I could not imagine if Snap gave guidance. It would have probably caused the stock to tank another 25 or 26%. Yeah, that's just incredible. I got a feeling we break out. These levels don't lie. That is a very true statement, Nick. What do you think about Amex and Cleveland Cliffs tomorrow playing both? All right, we'll look at those. All FOMO, yeah, I can see that. Like you said, how do you different? How do you tell the difference? Honestly, that's true. I'm hopefully actually that's a great question. That's great right there. Here, let's put this up because this is exactly what I'm trying to do right now. This is what I'm trying to do. Let's look at another chart, okay? And I'm running down a few of the sectors of the S&P 500 right now, which are potentially give us an indication of whether this is real momentum or if this is just FOMO, okay? Energy coming down, that's good for the markets because inflation comes down, which means the Fed could lighten up a little bit, okay? That causes stocks to go up. Now, let's look at semiconductors. They are hot right now. SMH is the ticker symbol that I want to use. We did weekly expected move for SMH, and you can see when I open it here, it has been on fire. I'm still on a weekly chart. I'm going to go to a daily chart now. Semiconductors have been hot recently because of the federal government. There is a CHIPS bill that is working its way through the Senate right now. It made a procedural pass the other day, this past week, and that is sending the semiconductor stocks and the index and sector higher, okay? So look at this. It broke through. Number one, the first thing to point out here is the blue trend line at the top that's coming down. It broke that yesterday just barely, and today it kept growing. It kept going and going. This year, 2022, semis have been in a hard downtrend, right? It's been using this resistance and support line all the way down. However, yesterday, today, obviously, it has broken above that. It also filled in a gap today, so I can actually remove that gap because it has been filled now. Remember, all gaps get filled. Bam. That gap from all the way back on June the 10th, 2022, that gap that was made on June the 10th was filled today for semis. So now, been on a tear. Look at all those green candles in a row. This is its 2022 resistance that it has broken out of. Seeing a successful backtest of this trend line would be very, very bullish. Here's the scenario to watch for tomorrow. Semis is way outside of its weekly expected move, okay? And remember, that's this the top purple line right here. That's its weekly expected move. 68% of the time, This is where equities, cryptos, it's where they end on Friday at the close of business. Within these two lines, 68% of the time, that's where a stock will land, an index will land, finish the week, right? If it breaks out, it can come right back down, either side, bottom or top, okay? So that's one thing to watch out for tomorrow. What are semis going to do? If we look at the RSI right now, the semis are at a 68. That's not overbought. It could have more room to go. However, what I want to point out is that is a local high. If we go back here to this area right here where it broke down from hitting resistance, at that point, 61 was the highest it got. If we go back to another high point, again, 61 is as high as it got, and that was when it broke out right here. It broke out of that resistance. The very next day, it came right back down inside that resistance. Is that what we're going to see tomorrow? It break back down and fall back into the weekly expected move, or at least underneath that resistance like it did. Again, 61 on the RSI was the top. 61. Right now, it's at a 68. So, a couple of things to point out there. It is overextended for how the momentum has been on it for over, let's see here, we got April, May, June, July, like 4 or 5 months. That's important. That's important. Okay, let me just clean the chart up here real quick. All right, next thing I want to look at is XLI. XLI are industrials, right? Oh, I didn't press enter. Okay, there we go. You're going to see a very similar setup here to how the semiconductors looked, right? A big move earlier this week on the 19th. But right now, where is it on this trend line? And this trend line goes back resistance here. It started in April. We had it break out and close above it once right here, and then it went back down. It is sitting right on that line right there. Plus, it is above its weekly expected move. So, if it's rejected here at this resistance, then expect the market to pull back too, or start falling. That's what I get out of it. If we look at the RSI, RSI is at a 59. We go back to the last time it broke above this resistance, we got to a 61. So a couple of points difference that we could go up. We go back to the last super high on March the 30th. I call it a super high because it feels like it's been dropping so hard since then. That was a 68. So there is room for momentum to continue to go. But we can't ignore these trend lines either. Something else to point out about this is it did close above its 50-day moving average today, which, again, if this is FOMO, that means we're going to start to go up faster and faster and faster. If it's real momentum, it'll be a steady, gentle ride higher. So that's something to watch too. Candle size. If these candles start turning out to be really big movers, and I'm not saying today or even yesterday were, they're practically even. Up 0.72% today, yesterday up 0.77%. The day before that, though, that's a 3.5% move there. That's a pretty big candle. That could be FOMO. But slow and steady is how it will naturally appear. Quick, popping off, that's FOMO. Now, let's look at financials. XLF for financials. Same thing. Watch this. When it loads, same thing. There we go. We have a resistance line. Well, first, weekly expected move. Yesterday, it closed right on the weekly expected move to the upside. Today, it broke out of the weekly expected move. It also broke above its 50-day moving average. Today's candle, yesterday's candle, they were slow and steady. So I don't think that's FOMO on banks, right? Did I mention it, the 50-day moving average? I think I did mention that. But it's above that too, in case I didn't. Okay? So we have all of these sectors. They are above the weekly expected move. They are above a resistance line. They are above their 50-day moving average. Those three together are all bullish signs. RSI on all of these are at a local top. Look at financials. RSI is at a 59. The last peak on RSI was 60. We go back before that, 60, 59, 60, 59, 60, 60. Okay? We go back even further before that, and it's a 65. But that was in February. So over the past several months, the highest RSI has gotten is 59 or 60, and it's at 59 right now. So that's telling me we are at a local top. Okay. Let's keep going. Okay. Next up is the SPY. Let's see how that looks. SPY. Let the chart load. The SPY, it has already broken out of its weekly expected move, that top purple line. It did that yesterday ever so slightly. Today, more forceful. However, 400, just like the S&P 500, 4,000, that is a very strong area of resistance. Very strong. That could be an area where they both, the SPY and SPX, both stop. Resistance at 400 on the SPY, 4,000 on the SPX. Could we come back down and land within the weekly expected move? Well, let's look at the RSI on this again. And one other thing to notice, the gap fill here, it filled about half of that gap today. The one thing about this gap fill is 400 is still inside that gap. And usually gap fills are very easy to do. But when you have a big psychological number like 400, maybe that gap doesn't get filled quite as easily. Okay, let's look at RSI here real quick. RSI is a 61. Let's go back and look at other peaks. 58 was the last peak. Before that, it did get to 68. And then, well, before that, the peak was a 52. So with this area up here, where there's a lot of sellers just waiting, the highest RSI got on that move sideways was a 58. And really, you couldn't call it the rally. The highest momentum got was 58. And if you look at the slope here, let me do this. On the RSI, if we look at the slope from the bottom to the top, okay? And then what I want to do is I'm going to put another line. We're going to go from this bottom to this top. And if you look at that, what we've been doing, this sideways contraction move here, and then the final breakout, it wasn't as steep as the last one. And obviously, because the last time it was boom, 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 and then we consolidate, this time it's been stretched out even longer. All right, let's take those off of here. So again, I'm seeing signs that this could be real momentum. Let's look at the SPX. Let's look at that right quick. Did I see how someone asked Nancy Pelosi about her husband inside trading on her? No, I did. I read a story or two about it. Okay. About Nancy Pelosi and trading, whether senators and congressmen and women should be allowed to. That was a few months ago. I've seen headlines and haven't dug into anything recently about it. Did she say something funny? Like, yeah, that we should be allowed to? Oh, man. Yeah, that shouldn't. My view on it, no. They have congressmen and women. They have inside information. Totally. She ran away from the question. Ah, boy. Isn't that what politicians do when it's a hard question like that? Don't they run? I think if you're in Congress, you're there representing your people. You're representing your community. You should not be using any inside knowledge that you receive to enrich yourself. No. There's a lot of politicians who do trade. There's a lot of politicians who put their finances in blind trusts. I can respect doing it in a blind trust. I can respect at least doing that, you know. But no, shouldn't take inside information. She said, absolutely not. They literally ran away. Oh, I'll have to look that up after we're done here. That's pretty funny. Okay, on the SPX here, we have a very similar to the SPY. Very similar to the SPY. It's 4,000 level. That's a tricky one, right? That is a very tricky one here. It's got resistance. It is very possible that we got a little FOMO today. It took us up to that 4,000 mark. And then tomorrow we hit resistance and we sell off. You know, that's what I'm leaning. Even though I said that yesterday, that you know, I was indecisive. I really think there was FOMO in this market. But there are clear signs of real momentum. I've pointed those out already. But when we let me go to the 15-minute chart. This will visualize it a whole lot better. Let me do this. Let me open this up a little bit here. The swings that are made, okay? Let me have like here's 4 trading sessions. Look at these big swings in price, right? Look at this. Today, the low for today was 39.50. 39.50 was the low for today. And then we close at the high of the day, which was 39.98. So we've got a nearly 50-point move, a 50-point swing right there. From the bottom to the top, nearly a 50-point swing. That's pretty big. I mean, look, when we're here at 39.98, that was a 39-point move to the upside, which was basically 1% move. And if we look at yesterday, look at this. I mean, we go from 39.34 up to 39.68, down to 39.46, back up to 39.66. That's volatility. That is the definition of volatility. It swings up and down. And we're seeing those big swings this morning. I mean, we dropped 0.62% in 15 minutes, which was a 24-point move. That was earlier this morning at the 10 o'clock hour Eastern. We go back to the day before. The low that day was 38.79, and the high of the day was 39.36. That's a big swing. The day before that, it was in the opposite direction. Let's see. The high of that day was 39. No, I'm sorry. Oh, man, I can't see what that is right there. 38.95. And then the low, 38.18. Just, that's volatility. The reason I point that out is because volatility can go either way, right? So we've had 3 nice days running in the market. We get to some real resistance, the 4,000 level. We're outside of the weekly expected move. This could be an area where we stop, okay? We could have a very small green day tomorrow, right? Just moving up. Volatility could be big. Let's look at the VIX real quick. The VIX is going to give us the read on volatility. CBOE, that's the one that I choose there. And look at this. Volatility has been steadily declining as the market has been rising. Now, it's down below its 200-day moving average. That's significant. It's outside of this wedge, this rising wedge here that had been in for a while, for months. It's down to a 23. But that is still, when you're in the 20s, that's still high volatility. You want to get down to like 15 to 10, in between there. That's more of a lower read on volatility. So 23.11. Volatility is still high. So with the S&P 500 sectors that we went through, we looked at, they look like they could be setting up for breakouts, or they have already broken out, like today or yesterday. And we could be looking at big time FOMO here. Or we could be looking like a bull run that occurred at the middle to end of March. Remember that snapback rally? And let me show you that just to refresh your memory. It started in the middle of the March. It was right after we got a death cross. And let me highlight it here. But it's this big move right here. That snapback rally. That was huge. That was a huge bullish move. The one thing that I would point out, if I'm trying to look for whether this is FOMO or not, is again, how quick is this moving? Is it expanding as it goes up? And 3 days really isn't enough to judge or not. If we look back at March, okay, there were 1, 2, 3, 4 days of big moves up. And then the 5th day, which was resistance, it was red, and it was a very small candle, but big volatility that day. And then it moved up again, and then it pulled back. That was the back test there. It held above that very important resistance line. It held it as support, and then boom, it was off again for another 4-day run. That's what we could see here. We've had a 3-day run. I mean, we could actually go back and to July 14th and go from there. One red day in between. We get resistance here. Maybe we pull back, and then maybe we break above it next week. Back test, and if we back test successfully, that's when I think that we could really be off to a bull run, right? But until we finally break above this area, which is 4,300 on the S&P 500, even if it was green all the way to that point and then found resistance, I'm not going to switch and say we are out of this bear market until we break 4,300. Then I would start thinking, you know what? Maybe it's time to adjust the thesis. This market is marching, and when it marches, it goes, right? So just a couple of thoughts there real quick. What do you guys think? Do you think this is real momentum or FOMO? We're at key resistance. Let me look at the Q and the NASDAQ real quick, and then we'll talk a little bit more deeply about today. With the chart load here, again, we have broken above the weekly expected move. We filled a gap this week, and now we are up here to these levels. I mean, technology has been moving. I mean, we are back up here to these levels up here where there will be selling pressure, okay? I think for technology, I think Snap breaking down is going to hurt the NASDAQ tomorrow, and it's going to hurt the Qs tomorrow. Snap could have been like the linchpin of this rally, and it just got pulled. With Alphabet coming down, Meta coming down, any internet company that has revenue from online ads will come down tomorrow because of Snap. And that could be what breaks this bounce and reverses it. My thought there. There's so much money on this. Oh my gosh, there is a ton of money on the sidelines that it feels like it could be a V-shaped recovery. Yeah, I don't think so. I really don't. I don't think people are comfortable yet because of the growth concerns that are still out there, right? We haven't, I mean, in Europe, just today, a bank raised rates for the first time in 11 years. That's significant. I know that's Europe, and Europe is not the US, but sometimes Europe can be a leading indicator for what can occur here in the US. I mean, we had relatively negative headlines this morning, which totally fueled lingering growth concerns. And it did lead to the stock market dropping this morning. On that 15-minute chart, the stock market, it dropped this morning before finally starting to march higher. After the news that of President Biden getting COVID and saying he had cancer yesterday, the market dropped as soon as that news broke that the president had COVID. Of course, it recovered, but it did drop. I mean, I think the Dow dropped like 100 points, like in the matter of minutes as soon as that news broke, but then eventually started to march higher. But we did have risk concerns out there of growth, slowing growth. but the market regained its footing and traded the rest of the day higher. Okay, we looked at the 15-minute chart, so we know that. Now, the S&P 500, the last time it flirted with this 4,000 mark, it was 3,600 back in mid-June. And it's just shy of that 4,000 mark. We looked at that. The housing market is a big question mark, right? How far will housing prices go down? Because if housing prices fall, people spend less money. There is that correlation. Home builder D.R. Horton, ticker symbol DHI. It actually finished the day, I believe, higher. Am I right? Did I get that right? It's loading. Yeah, it finished today higher. Yeah, 3.7%. They cut their fiscal year 22 revenue outlook. And then they also said that there was a slowdown in demand in both June and July. So how far are housing prices going to fall? We talked about this yesterday. People are getting pushed out of the housing market. We also talked about this yesterday, but Microsoft said that it's going to slow the pace of new hire activity. Initial jobless claims, they topped 250,000 for the first time since last November. The Philadelphia Fed index, it was negative by 12.3% in July on a further drop in new orders activity. And then the leading economic index for June was down 0.8%. So there is a slowdown in growth. Could the first half of 2022 been an aggressive pricing in of all of this economic slowdown? Yeah, it could have been. Because buyers were not deterred by these factors, suggesting that some of these growth concerns today were already priced in during the first half of the year. Market breadth, it for the first time in a while, it showed buyer conviction, advancing issues, leading declining issues by 3-2 margin at both the NASDAQ and New York Stock Exchange. Mega cap stocks, they have been, just going back, looking at the Qs or the NASDAQ, they have been a very important directional driver. Oh, I typed QQ. 3 Qs, not 2 Qs. A very important directional driver. The Vanguard Megacap Growth ETF, track that regularly. The ticker symbol is MGK. Here, I'll just put that up there. It closed up 1.5% versus a 0.6% gain in the S&P 500 Equal Weight ETF, ticker symbol RSP. And the top right side of the screen there, the 0.99% gain in the S&P 500. So it beat them all. But tomorrow, because of Snap, I really think the market could pull back because you have mega caps that are going to pull back. Today, one of the biggest mega cap movers, Tesla, TSLA, it did way more than I thought it was going to. I thought the after hours movement yesterday was just a taste of how investors were going to react to it, but no, it was not. And this is one I got totally wrong. But look at today's movement, 9.78%, like a 10% move here. A 10% move in Tesla. Shooting, gapping up, number one, and then shooting way outside of its weekly expected move. And remember, Tesla yesterday in the after hours, it did report better than expected earnings, but margins were kind of weak. But Tesla's outperformance today, this is just an example of how mega caps are really directional drivers right now in the market. Tesla's outperformance gave a nice boost to the S&P 500 consumer discretionary. That was up here. Let's pull those up real quick. I believe it was up about 2.3%. Yeah, 2.3%. It was the top of the leaderboard today. The top. Because of Tesla. If Tesla didn't move 10% today, it wouldn't have. Then we talked about energy. Energy was the worst performer today, down 1.7%. And it was one of the only two that closed in the red, negative today. The other sector that closed with losses was communication services. That's where Alphabet lies. Wait a second. Did I just get that mixed up? I just had a meltdown there. I'm forgetting for some reason. Yeah, communication services. I don't know why I had to look that up. Oh boy. Oh well. So yeah. Communication services being down 0.2% today. If Alphabet slips and it turns green tomorrow, and let's just pull that up right quick. If it slips in tomorrow because of Snap, well, that's not going to be good because it's a big mega cap company. And they have literally been driving the market. I mean, goodness gracious. It's after 6, so I don't have the after hours data for what it did. But it closed at 115.04, which was up 0.3%. All right. So Google or Alphabet, I don't have it here pulled up, but the weekly expected move, let me open my notes here. I want to get the weekly expected move out here for Google. I know it's within it. If we look at, while that's loading over here for me, I'm going to put a couple of trend lines here on Alphabet, and we can see this price action has, I could go from right here, possibly like that, potentially. Or I could bring this down here like this. And it's still, there we go. That's more accurate of what it's doing. So up, down, up, down, up, down. Price is tightening. And let me see what that weekly expected move was for Google, Alphabet. But all right, it's still loading. There we go. Oops. All right, come on. I took the long way to get here. I guess I shouldn't do this during a live stream. Is that what the what this is telling me? Oh boy. Okay. Finally. All right. So Alphabet, a $107.58 weekly expected move. Again, that's plus or minus, and that was actually for GOOGL. That's the one that I did it for. That's pre-split. So Google is within its weekly expected range. Now I've got too many tabs open and now it's slowing down. Okay, well, let me just close these out. It's slowing down too much. All right, so Alphabet's went within its weekly expected move tomorrow, and I'm just saying Snap could be a reason for a downturn further with online advertising and the different sectors in the market, right? Especially the ones that are up against their resistance lines. But today, Alphabet didn't play a role in bringing the communication sector down. AT&T did. It was down 7.6%. T-Mobile did. It was down 3.1%. And Verizon did. It was down 3%. All of them traded down lower after AT&T beat on earnings but lowered its free cash flow guidance. So again, we have guidance being lowered, causing stocks to go down. I don't use, I need a desktop. You are absolutely, I do. I use a Pixelbook, so everything is literally done in the cloud, and that doesn't work very well for streaming. It does not. So yeah, one day I'll get one, and then I won't have those lags on TradingView either if I did that. Okay, moving off of this topic that I stretched out way too long. Let's talk about the Treasury market for just a moment, real quick, because it showed growth concerns today. With the data that came out showing that there would be a slowdown, the 2-year closed down 15 basis points. US, get my cursor over here, US 02Y. A PC would be amazing. Yeah, it would. I've used Chromebooks for years. I always liked them, but then I decided to do this YouTube journey, and yeah, I don't have the right equipment for it. So one day I'll get a PC. And then these live streams, they won't be so slow. Okay, so we big drawdown, but it did bounce on its 20-day moving average. It's still above this support line here. So even though it pulled back, not too bad. And it pulled back to 3.09%. And that's basically where it's at right now. You could round up and say 3.1% is where it is currently. But again, a pretty big drawdown. The 10-year did the same thing. Let's pull that up. US 10Y, that fell 13 basis points to 2.91%. And you can see it is down even more here in the after hours to 2.88%. That is real growth concerns right there in the Treasury market. Banks do not like the 10-year and the 2-year to be inverted, right? So that's going to put pressure on banks. That's going to put pressure on the financial sector, right? And we looked at that at the very beginning. So the Treasury market is being more responsive right now to slow down worries that the stock market just is not worried about at all. And stocks, for the most part, they handle the worries about economic slowdown relatively well. Most market participants, I think, we're clinging to the notion that stocks have priced in, and I mentioned this already during this live stream, maybe prices have been priced in with the first half of this year and the decline that we saw. And we know historically, statistically, that when a market falls like it has during the first half, usually the second half is better. I mean, Tesla, during their earnings call, Elon Musk said the second half is going to be better than the first half, and they should have more deliveries. That would be that's a possibility, I think, too, especially if China can get itself under control and if the Shanghai factory can stay open, because that was a big hit on margins. Okay. My point was, before I went off on mention about Tesla. Oh yeah. So if growth concerns were already priced in at the beginning of the year, then that could possibly mean that the slowdown that we're going to see in the back half of this year is also priced in. And if the economy weakens, like all these flashing signs that says the economy is slowing down, then that could compel the Fed to take a less aggressive rate hike approach in the coming months. All right. That's everything that I wanted to that I have in my notes to talk about here today. There's really no important economic data coming out tomorrow. So tomorrow will be a day of, well, I kind of think tomorrow is going to be a day that is going to tell us for sure if we are in a real momentum move higher, or is this FOMO? Tomorrow is going to tell us, I think, because at the very beginning of this video, I showed you a few different sectors that are either at resistance or just broke resistance over their weekly expected move. And 68% of the time, when they're outside of that, they pull back into it. So tomorrow's going to be, I think, the real test of this week of whether we are truly real momentum or if it's just FOMO leading this market. Because if we have a big positive move above 4,000, there's nothing else to explain that besides a ton of money coming in off the sidelines because it's real momentum. If this starts to break down, it could break down fast because everyone who FOMO'd in is either going to FOMO out or they're going to get trapped at this 4,000 level. And then they're going to feel like the people that are trapped up there at 4,300. All right. I think Snap and Meta will drag the market down tomorrow. I do too. I think Snap was the linchpin. I do. Pull Alphabet down. I know Alphabet, Meta platforms, Pinterest, especially Snap, even Etsy, they were all down in the after hours. So that means tomorrow morning, there's a very good possibility that they are all opening up lower in the morning, which could mean the market's going to open up lower in the morning because of that. And then if we have a red day on Friday, that could take the wind out of the sail of this rally that we're in, bring things back down underneath recent breakout points, underneath that resistance levels, and then that could probably signal to other investors that, well, it was a good try, but the market's just not ready yet. So I do. I think tomorrow's a red day. I think it's a pullback for those sectors that broke above their resistance. I think it's a pullback below that resistance. I think it's a pullback into the weekly expected move on the high side for all of these. So investors on Patreon, you all have the breakdown of the sectors and where that weekly high is. That could help you play tomorrow if we do end up moving to the downside. Again, I'm with you. I think we will. Why is Google down? It's because of Snap. Where do they make all their money from? The majority of their revenue comes from online ads, and Snap, the reason they are down so much is because of lower demand for online ads. That's why Alphabet was down, or that's why Google was down, because of Snap. All right. Any other questions? Put them in now. And while you do that, if you have any, let me just say, smash that like button for me. Share this video with a friend. Those are all helpful things for this little old channel. Also, if you like this perspective, you want more of it, our weekly expected moves, trade setups throughout the week, trade ideas, top 10 stocks in 4 different categories, information, economic breakdowns of different reports on the economy. Click the first link in the description and join us on Patreon. Ton of information. All right. Well, if that's good, if you all are good, then I'm good too. We'll wrap it up. I'll see you tomorrow after the market closes. And one thing we'll do tomorrow during the live stream is we'll go over each sector in the weekly expected moves, see how that worked out. Because remember, 68% of the time, that's where the market will land within it. And since this was Sunday was our first release of the weekly expected moves, I want to go over them with you guys just to make sure, see how they worked out, number one. Make sure that the formula we use is accurate. All right, cool. Well, thank you guys for joining me. I greatly appreciate it. I'll see you back here tomorrow after the market close. Have a wonderful evening, and I'll see you in the next video. Take care.